Hello traders, hello everyone, and welcome to our new video analysis. I didn't held a webinar this week, so I decided to make a quick video outlook here on the markets that we normally follow, but we will have a new webinar on Monday. Okay, so make sure to subscribe to our channel, put the notifications on, or if you love our content, either you can leave us a comment below this video or press a like button. Okay, so what's going on? Well, we are seeing US dollar coming to the upside with the US yields, which makes sense, but then we also have higher stocks, especially in the last 24 hours here in the US. So we will see how the stocks will actually unfold in the upcoming week. I think that if US dollar will continue to rise, if the US debt ceiling will really be improved, then I somehow assume that maybe stocks could face at least temporary resistance. So I think that US dollar in general can be headed even higher in the coming weeks, especially after these very sharp reversals that we have seen on major currencies over the last 2 weeks. And when it comes to this intermarket analysis, as you can see here, we have the S&P 500, US dollar, and the US yield. So all three are trading in the same direction. But when you look here, then at the bottom, we have some major currency pairs, and you can see that the euro is the weakest, then it's Aussie. So those two, Aussie in particular, could potentially see more weakness, and the reason for Aussie to be so weak is probably because the economic activity in China is still not picking up, but they are doing everything what's needed to stimulate their economy in China. So at some point this will have also positive impact on Aussie, but for now I think we are not there yet, because all of this, of course, these crosses are mainly now driven by the very strong US dollar. So if we look at the euro dollar here, we shared this chart and this trend line potential breakdown at the start of the weekend. So far we are coming very nicely to the downside, and I assume that we could be headed even lower to make this either free wave correction towards 105.70. okay, because as you know, when market makes this 5-wave rise, right, you could expect a free wave correction before market again turns to the upside, I think sometime later this year. Or another interpretation and the valid view is also that we are here in a flat correction, okay, and that this is the consolidation already underway since February. And the reason for this wave count that is also valid is because this recovery somehow was very slow, very choppy, overlapping. I've been tracking this one very closely over the last few weeks, and so far you can see very nice strong bearish reversal. So even if this drop towards 105 will be strong and impulsive, I still think that very strong support here could be seen at the lows of the 2023. So looking at also at the 4-hour chart, you can clearly see here we have let me try to delete something here. Okay, you can clearly see here that we have some very nice ongoing weakness, and this looks like a very strong impulsive flag here from 110.90. okay, so in my opinion, this kind of activity represents very strong and extended lag, especially when you compare this lag to the previous wave one. So when you have an extended lag, you can assume that market is in impulsive fashion. So in my opinion, there can be more weakness coming next week after the rallies. So the first resistance that we should pay attention on, in my opinion, on this rally could be potentially here around 108.30 to 108.40. So that's the area, but I will remain bearish as long as we are trading below 109.40 area. Okay, so I think that euro, since it's one of the weakest, I think it can easily see more weakness next week after these corrections. Okay, now let's take a look also on the S&P 500. So here's this triangle that we've been tracking over the last few months, and looks like that this wave E could be finished now. I know it's a very small, not really the ideal scenario, so that's why I have multiple different wave counts, but both suggest that we could potentially see even a retest here, at least in the next few weeks here of that level. But of course there can be some short-term pullbacks in the meantime, especially if the US dollar will really stay strong. So one of the reasons why maybe the S&P 500 is obviously trading to the upside is because speculators believe that sometime this year, as you know, we said this so many times that sometime this year Fed will stop the hiking cycle. Okay, now let's take a look at some of the single stocks. Here I have Alibaba, not really labeling the wave count, but you can see that the price itself is very low compared to the levels that we have seen back in 2014, 2015. And this is quite interesting in my opinion, especially if China is really going to stimulate their economy. Then, as you know, those stocks could see much more upside potential, especially if maybe economic activity in the other countries will remain strong, especially if maybe Fed will really stop the hiking cycle. Then you know that other central banks will follow, and that's when normally again stocks could potentially see more upside. And when you try to link this with the China, then I think that this is quite interesting stock, especially because with this stock you are somehow long on a global scale that includes China as well. Okay, so I think this one could be quite interesting. Also looking at Tesla. Here where it is. Okay, so Tesla, we covered this one and published it on Twitter a few times, and so far I think that we have a very nice, beautiful price action here. Notice that here it's a very strong recovery from a new low, and always when you see a very strong move like this one with no overlaps, usually that's an impulse and suggests that trend has changed from bearish to bullish mode. So you can expect more upside after a free wave pullback. So that's how Elliott wave works. Firstly, market moves sharply in 5 waves, then it will pull back in 3 waves. Okay, 5 step forward, 3 step back. So now when we reach this recent gap area here that goes back to earnings reports in January, I think that there can be base trying to build up. So in my opinion, this Tesla and whole technology sector, including AMD, could potentially see much more upside. We are also seeing Nasdaq 100 in uptrend, could see much more gains, and in my opinion this could at some point also have a positive impact on cryptos, which are trading at some interesting support levels, but not really enough of strong price action data to say that cryptos already completed the correction that is now underway from the latest 2023 highs. But I will talk about more on cryptos, Bitcoin, Ethereum, and other markets in our webinar on Monday. So make sure to be with us, traders. I hope that you enjoyed this video and have a nice weekend. Bye.